Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a strong historical structured zone. This level, we have already spoken about it quite a few times, was a very important level of support for many years. The market, every time that it reached this zone, immediately rejected to the upside. And some of these rejections are really major ones. We can see these two, for example. And so far, in all these years, only one time did the market manage to break below the zone. And that was with this move to the downside, in which anyway, it ended up being a fake breakout because the market broke below, immediately broke back above, and continued respecting the level as support. Right now, we can see another test of the zone and a huge rejection to the upside. And considering how aggressively the market is rejecting, there is a good probability to see yet another one of these huge rejections to the upside, and for the market here to continue showing bullish price action fueled by strong institutional buying. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis to see how institutions are positioning. But for now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice here is a perfect inversion of trend. The market went into that monthly support and demand with a clear downtrend. From a weekly perspective, the market, in fact, clearly was showing weekly lower lows and lower highs. Then we had this double bottom as a reversal pattern right here, and the market now inverted the trend to an uptrend. So with the creation of weekly higher highs and higher lows. So essentially we had a perfect transition from a bearish trend to a bullish trend. So from lower lows and lower highs to higher highs and higher lows. So far, the uptrend is still intact. What we can notice is that the market is testing previous weekly resistance, now turned support, and rejecting it to the upside. In fact, from here, this is the previous level of supply and resistance from which all this push to the downside was created. Now, the market broke above that zone, so this previous resistance is now turned support. The market is respecting it as support. So more bullish price action could be expected away from this level. What we can also notice is that from a pattern standpoint, we have a clear impulse followed by a correction. If we want to measure this correction, we have to take our Fibonacci from the low to the high of the impulse leg. What this will show us is that the market has retraced exactly to the 50% of the Fibonacci taken on this impulse leg. Now, if you're asking yourself why precisely the 50%, well, that is because most of the times the market will retrace to the Fibonacci level, which is lining up the best with previous structure. In this case, the structure was exactly this one here, this previous resistance now turned support. So it is no surprise that the market retraced exactly to this confluence of support zone before then getting rejected to the upside. So more bullish price action could be expected here away from this level. Let's keep that in mind and drop down on the daily time frame. From a daily perspective, I did speak about EURUSD just a few days ago. I spoke about it when the market was here. I explained all the reasons for which I was expecting this rejection to the upside. And then again, after this impulse and correction from here, I explained all the reasons for which I was expecting this rejection to the upside, which again is exactly what the market did. And by the way, I will link in description these two previous analyses so you can go and check them out for more free education. But at the moment, what kind of structure we have? Well, first of all, the market does have resistance at this zone. This was the previous daily highs. So we have to see what are institutions doing around these zones and during all this push to the upside. To do that, let's go and check out the commitment of traders. Now, we have to keep in mind, if we're looking at the data for the euro, we're actually already looking at euro USD because all currencies on the spot are traded against the USD. And what we can see is that in the long run, we had a huge inversion of institutional positioning. In fact, we went from having a negative net positioning like here with minus 64K net positions, meaning that institutions had more shorts than longs, with 230,000 shorts compared to only 165,000 longs. Now we have the complete opposite, way more longs than shorts. 82,000 longs compared to, 82,000 net positions, so 202,000 longs compared to only 120,000 shorts. So we had a complete opposite. We went from having more shorts than longs to now having more longs than shorts from an institutional perspective. So we went from having a negative net positioning to now a massively positive net positioning. This means that institutions were expecting that rejection to the upside away from the historical monthly demand and support zone. And it comes as no surprise that as institutions are longing EURUSD is moving to the upside. That is definitely what you would expect. So what kind of situation we have. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, what do we have? Well, we have already identified this area as strong resistance. It already held the market twice. So until the market will remain below this level, it can easily continue lower. However, if the market manages to break above the zone, that is where things get very interesting, because a break above would make this previous resistance become support. And that is a good area, in my opinion, in which we could see more institutional longing, further increasing the probabilities of a potential rejection to the upside away from this area. So if we do see this break and retest, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this area. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.